Welcome to the Treasury Whisperers Talkcast podcast, your go-to source for insightful interviews and dynamic panel discussions in the worlds of treasury, banking, payments, fintech, and much more. Here now is your host, the Treasury Whisperer, Seth Marlowe.
Hello, Whisperees. Joining me today in the Whisperer studio is Sean Carter. Sean is the president and CEO of NEACH, New England ACH, and its subsidiary NEACH Payments Group, or NPG. Sean serves the industry at a personalized one-on-one level. Specifically, he helps financial institutions, corporations, and vendors solve operational and regulatory challenges, manage risk, and drive financial and business improvement through a suite of audit, risk management, and consulting services. Sean is a frequent speaker on payments topics at events and key forums across the country, including NEACH Payments, the AFP Conference, Transact Connect, and many other regional gatherings. With his focus on supporting the industry and shaping the future of payments, Sean has participated in a number of groups, including the Fed Payments Improvement Security Group, NEACH's Rules and Operations Group, NEACH's Risk Management Advisory Group, and the Center for Payments. With that, Sean, welcome to the Treasury Whisperers Talkcast podcast.
Thank you, Seth. Very happy to be here. Very happy. Thank you very much.
Yeah, glad to have you. So for our listeners who may not be all that familiar with NEACH by name and may not fully grasp its role, maybe you can describe NEACH and the I guess the separate but together NEACH Payment Group and what you guys do for banks, credit unions, and the whole payments ecosystem.
Yeah, sure. So NEACH is a trade association. So we're one of 9 what you call regional payment associations. It used to be like 30 of us. We're down to 9. We're all at its core. We're providing education and rules compliance help for financial institutions. Generally, we all started as ACH associations, so it would be mainly about ACH payments, but now we've all broadened. So as you mentioned before, the Center for Payments, which is now what the 9 regionals call ourselves together, we all pretty much do the similar services. And it used to be broken up basically by Federal Reserve District. Each Fed district had a regional payment association. Yeah, so we're typically first in Southern Connecticut, part of the 2nd district. Those walls are kind of changing as the years go on. We now have member banks in Pennsylvania, New York, and other places, but mainly it started that way. And that, again, if you were to say the major thing we do is we have a rules hotline where people during their day are having a fire with the payments issue, they can reach out to us and they're going to get somebody that's certified, whether it's an AAP, NCP for check issues, APRP, a CAMS person. We can help them make a good decision and not make a bad situation worse. And then we do an awful lot of training. We get people ready for the 3 major certifications that NEACH pushes, the AAP, the new AFPP, which I finally just passed, the faster payment
Congratulations.
certificate. Thank you. And then the accredited payments risk professional, which is a cross-channel exam on all payments. We have conferences like any trade association does. We have a corporate membership as well, where we have corporates that call and say, "Hey, I'm trying to sue my bank because we had a fraud. How can you help us?" No, we'll help anybody that's a member. We're truly independent, right? We're not just there to protect the banks. And if a bank makes a mistake, we're going to tell the corporate, "Hey, here's what should have been done." So we have that ability to be a truly independent party. We don't pick vendors. We don't tell people this core is better than that one. We just answer your question based upon what the NEACH rules are going to require or an FFIEC requirement. In about 2015, when NEACH started its ACH audit rule, we were doing a lot of audits. And we had some very smart people on our board. Our previous CEO was very smart and said, "Hey, wait a minute, there's a risk here. If somebody does a bad audit, they could sue the association." And so they spun off a subsidiary that's wholly owned by NEACH, which is called NEACH Payments Group. That's where we do all one-on-one field work. Like if I'm doing consulting on payment strategy or spinning up a treasury division at a bank, ACH audits, risk assessments, RTP audits, anything like that is done through NEACH Payments Group. And we actually have dedicated staff at NEACH that work on NEACH Payments Group. So Caitlin is basically our director of NEACH Payments Group. I'm the CEO of both and manage both boards, but Caitlin is the main person on staff at MPG. Yeah, we just had a milestone year last year for MPG, broke 300 engagement mark for the first time. We've been growing pretty steady since 2015. Yeah, in this world today, a lot of what we're doing is just helping people understand how fast change is happening and how can they blend in what they used to do with what's coming next. And it is a scary time for some institutions that just haven't been, I don't want to say haven't been paying attention, but haven't been paying attention.
Yeah.
And now they have to start making some decisions. And that's kind of where we come in and just, reassure them it's not over, right? You still have time. And there's a lot of gloomy predictions, obviously, in payments all the time. You hear, oh, ACH is going away. RTP is going to have all the volume. Checks are going to be gone. My first job here at NEACH in 1998, I was moving slides for a speaker from the Boston Reserve Bank at a conference, and it said, checks will be gone in 5 years. That was in
Uh-huh.
1998. So some of these dire predictions you take with a grain of salt.
Yeah.
That's basically what we do.
Nobody expected that 9/11 would happen and that that would result in so many lost checks and the
Yep.
emergence of Check 21, which
Yep.
probably added 20 years to the life cycle. At
Kept it
least,
alive. Kept it alive.
yeah,
Yep.
exactly. Hopefully, we'll see checks go away sometime before we're dead and buried. I want to go back to something you said. You said there were at one point there were 30 regional payment associations. What's kind of led to the consolidation? Because I've certainly watched and I've seen there've
Yeah.
been mergers and such. What's
A
led to?
lot of it was is driven by bank consolidations, right? We have so
Mm,
many less financial institutions in the country now than we did before. And so what ends up happening, like NEACH, when I started here, we had 1,400 members, I think, used to be the billing file every month, and we're down to like 400. And
mm.
people don't leave associations typically. They only go away after a merger or an acquisition. And so just in New England, we've seen a huge consolidation that continues to happen. As you know, we haven't opened many new banks over the years. Now we're giving some non-bank players the ability to get their charters and stuff, which will be interesting to see how many of those spin up. But yeah, that's really what drove it. You had some that were done because somebody was retiring. They probably didn't have a good succession plan, so merger makes sense. Like what you see in the credit union space, a lot of those mergers
Hmm.
don't have to happen. It's just they didn't do a good job of getting ready for the future, and then they find someone that can ease them into it. So yeah, it's been interesting because when I started, all the different names and the acronyms of the payments associations, and now you only have to know 9 of them. So people in banking today have a much better time than we used to have to know all of them. And if you had a notch rule book back in the day, there's like 2.5 pages of listed payment associations. Now it's like a blurb hitting in the corner. It's kind of interesting to see that.
So sort of related to that, I was talking to an industry colleague who was talking to me about just banking associations. And I was like, well, what are you talking about? I thought he was referring to the regional payment associations. He's like, no, they're these banking associations. And I did a little bit of research and came to find that there's like in almost every state,
Yeah,
there's the New York Bankers Association, the Connecticut, Massachusetts, just literally
yeah.
everywhere. I scratch my head saying, well, how does their mission vary from perhaps what you're doing?
Well, yeah, so that's a great question, Seth. So we have great relationships with most of these in the Northeast, and they're very different. They do a little bit of the lobbying at the state level, at the federal level. We do no lobbying. We're not allowed to lobby. We can educate lawmakers, right? So sometimes we'll chat with. So mass bankers will introduce us to a staffer for Elizabeth Warren or someone. Will have to explain what Notch is
So
talking about.
you're the guy that's got to control her.
No, no, that's not, no, but it's interesting that they serve a very pivotal role And the other big difference, the envy we have or the jealousy we have of those bankers associations, they have a much better connection to the C-level at the organization than we do. We're like CEO and down, right? Director of operations, CFO type connections. They're really tight with the C-levels at the banks. And they, again, you look at, we do this exercise with everybody. We look at people's 990s, and um, it's been really hard on those groups with all of the consolidation. They do a wonderful job of kind of always reinventing themselves to stay
Hmm.
alive, and they partner with people like us on events and at a new conference. Like we've just done some banking schools for mass bankers, Pennsylvania bankers. Great way for them to generate some revenue. Yeah, they really do a lot, and they usually have a small staff, which is amazing if you kind of, I don't sound like I'm selling them, but it is amazing when you go to the website and just see how many people aren't listed as working there, and the amount of stuff that they do is pretty amazing. Yeah, and it's credit unions are in the same space too. There's usually a credit union league that's in every state, or there's one that covers two states, and they do very similar things where they're helping them with some of that lobbying. And just the things that we don't address in training, like, we're not
Hmm.
gonna teach you how to manage a balance sheet. They'll have presentations on bank balance sheets and stuff like that. We've been lucky. We've had some of these people on our boards. We've been real lucky to have good relationships with them and the Federal Reserve. NEACH is a kind of a unique PA. We've always had a great relationship with the Federal Reserve.
Hmm.
That wasn't always the case throughout the country, which is kind of strange, but we've always had a great working relationship with the Boston Fed. In fact, we have a board meeting there every year in the fancy lunchroom, and they still do that for us. So it is kind of different how regions view the Fed and view their banking associations in the Northeast. They've been really dedicated to those associations. We have tremendous loyalty. The Fed has loyalty in New England. I think it's just in New England, people are more um, trusting and stuff like that, whereas in other parts of the country, it's a little different. And I've always been struck by that. In 28 years doing this, it's like, whoa, whoa, why is everybody not like the Fed here? What are we doing? But yeah, it's interesting.
For sure. Keeping up this sort of theme of relationships between different industry organizations. So the relative to the set of regional payment associations, is there anything formal tied back to NACHA, or is NACHA just
Yeah,
another
no,
big
yeah.
part
So,
of the
well,
ecosystem?
yeah, Nacha manages and operates the ACH network, so they have their network side of their business. They're also a trade, which the PAs are direct members of Nacha, which allows our members to be indirectly members of Nacha and get discounts on publications. A couple years back, they did allow for banks to directly join Nacha, so some of the large banks will be direct members of NACHA, but there's a rule that they also have to be part of a regional payment association in order to do that. So that was kind of what was agreed upon back in the day so that we wouldn't lose all the big banks to NACHA. But like a community bank probably can't afford what the NACHA dues are, but they join someone like NEACH and then they get access to NACHA's offerings, their conferences, their training, which we all do pretty much the same thing, but not just two sides of their business. They also now have Nacha Consulting, and they also have Afixius, which is a program of Nacha, which is basically account validation and working with the industry on API. And
Hmm.
they do a lot of good work down there. And Nacha's done a great job of making sure the industry had good discussions as faster payments were spinning up. Now we have the Faster Payments Council, but Nacha, in between that group being formed, was really great at bringing they even called their own conference the Faster, Smarter Payments.
Right.
And people used to wonder, like, hey, why is Nacha talking about all these other networks that are competing with them at the conference? It's really been great for them because they've been a part of all these discussions. And you see now the AFPP is done testing on same day ACH instant payments. So Notch has always been in the room. They kept themselves in those conversations, which is I always thought was brilliant on their part to do that. Instead of just saying, "Oh, the ACH network's the best. Don't
Right.
use any other system." It's kind of understanding that those things were going to evolve, and And there's room for all of them. I mean, the fact that there's still checks floating around should tell you that there's room for every person and every type of payment. We can handle them. So yeah, so that's the tie with us and Nacha. We're a direct member of theirs. We pay dues directly to them. The PAs have a vote on Nacha rule changes. The PAs vote on those rules along with the direct member FIs. And if a certain number of PAs say a rule's no good, it wouldn't pass. And if a certain number of direct member banks says a rule's no good, it doesn't pass. So it's a pretty fair system.
So interesting. You've been at NEACH now for, I guess, more
20,
than 25 years,
oh
right?
yeah, I'm on 28 now. It's
28. Wow.
feels like my whole life. So
Not a bad deal.
I don't know.
What would you say were some of the pivotal moments that have kind of shaped, your leadership of NEACH today?
Yeah, I think it started during the process, right? So I our CEO was retiring. I had a couple of directors say to me, "Hey, when you putting your name in?" And at that point, I'm like, "Oh, I didn't even think that was a possibility." And so I went through the process, and you just start going, "Hey, I can do this," right? It becomes there's not much I don't know about the business or the history of where we've been and where we need to go, um and then once I got it, I always tell people you can go to all the schooling you want to be a CEO. They don't teach you anything about that. And I will self-admittedly, my first year was a disaster. I just didn't take into account some of the history people had, and now me coming in from the inside and taking over, and I was trying too hard, right? I was pushing people because I'm like, hey, these people gave me a great opportunity. I got to show them I can do it. And, it just didn't start the way I wanted. And luckily I've had a very supportive board. And, once you calm down, it's really just understanding what Nietzsche has always been about. For me, working the reason I love there is because we have a mission, but it's about the members. That's all we're about at Nietzsche, right? Every product we come up with, it's not about my ego or getting my name out there. It's about, hey,
Hmm.
if this is not going to help a member institution, we're not doing it, right? And that really is the key to leading an organization like this, is making sure we're trying to understand where we need to meet our members, because everybody's on a different journey. Every bank is different. Every credit union's in a different spot. And you have to be able to have something for all of them, or they're not going to get the value, and they may say, hey, I'm not getting what I'm paying for, which is awful. Nobody wants to ever hear somebody
That's
say,
right.
hey, you've been taking my money and I don't get what I want. It's like, whoa, that's bad. But yeah, it's, and then leadership itself is, I think, this is going to say crazy. I think the pandemic helped me actually, because I had to manage all the people, and I had to really start saying, you know what, there's more to everybody's life than this job at Niche. There was people dealing with some real stuff at home, and
Hmm.
getting everybody remote, making sure we got that all set up while still communicating daily and getting information out to the banks about the unemployment payments that were a disaster. If you remember all the
Hmm.
fraud that was happening, we were trying to run a website with all the bad ABA number combinations, and everybody's working remote. You reach out to a staff person, you're like, hey, and a weekend, I'm like, they're probably not calling me back because somebody got sick in their family, or I think that really helped me, to be honest. It was an awful thing for the world and for the country, but in a small way, as a leader, I think being able to recognize that we have to have that balance. And as much as I want Nietzsche to succeed and us to make money and all of that, everybody that works there has to have balance. And that kind of helped me. It put a lot in perspective. You get to learn about people more too, a little
Hmm.
bit, like how do they react under something like that? And you just gain an appreciation for people that were here, but you might not have seen them in that light before. Because we all have biases, right? This is how I think
Yep.
this person thinks, or this is how I've seen them work. So I'm better than them as a worker. And that's all nonsense, right? And then when you get to finally see it, you go, okay, I see previous CEO loved this person. I get it, right? They're nails in a tough situation, right? And you can't
Mm.
kind of teach that stuff. So to me, that's been part of it. And after that, it's been a blast, really. I had some doubts at first, but after the pandemic, it's been a blast. And we're doing some stuff now with AI that we never thought we would be able to do. I got a great team now. Caitlin running my subsidiary. I log in each day. I don't have to put out fires over there. I just can at times focus solely on niche or at times focus solely on MPG because I got great people and both companies are really healthy financially and we're growing. We're growing not in our traditional territory, but in New York and Pennsylvania, which is again pretty similar economies to the Northeast. New York
Hmm.
as well. And so the banks are all dealing with kind of the same thing. And if we can help someone in Maine, we could probably help someone in rural Pennsylvania. They're probably dealing with the same challenges as a bank and how do they grow and how do they think about product offerings and stuff like that. And so, yeah, that's kind of where we're at
So,
now.
was there ever a payment association that was kind of based out or centered in New York? It seems to be
Yeah,
like a
they
whole
have one. Yeah,
map.
so the clearinghouse, which is the clearinghouse is like four different things, right? They run the CHIPS network, they run RTP, they're an ACH operator, so they're one of two. The Fed and they also have a trade association that actually merged with the original PA up in the Michigan area. So, but in Pennsylvania has been a little bit different in that area. There's been a couple of PAs that have always kind of danced in that area. And there was one years ago with a weird name, Crafts, I think it was. But a lot of those FIs, they just don't have representation. So we found people reaching out to MPG for their audits. And then you just have a conversation to say, "Hey, where you get your education from?" We don't. It's like, "Don't you have a PA? What's a PA?" And we're like, "Okay." And we have those conversations. Again, we're not the PAs have like a gentleman's agreement. We're not bashing down the doors in these territories to get
Hmm.
everybody to switch. But if somebody's not represented or somebody's unhappy and we can do it, we will do it. And the same with goes there. If there's an each member that thinks that payments first in the Mid Atlantic can offer better, great. Go ahead and get. It's
Hmm.
all about making the ecosystem better, safer, more resilient, and so as a trade, you have to understand that's the overall mission. And if that means you're not helping someone, but it still gets done, the mission's getting accomplished. So it's one of those we can't lose weird things, which is maybe why I like it here so much. As long as it betters the industry, we win.
Yeah, no, it's great. It's good to hear that there's none of the fisticuffs that happens with
Now,
lots of organizations that have regional components to
yeah.
them.
No, it's we work very well together. In fact, if anybody wants to jump on LinkedIn, check out the Center for Payments page. We post resources that we create directly together. We got some studies we do under our market intelligence arm that we developed as the Center for Payments. Yeah, we work very well together.
That's cool. So let me ask you this. A lot of financial institutions are trying to kind of strike a balance between ACH, real-time payments, wires, and the ongoing checks that are out there. And now there's all this talk about stable coins. How should payment leaders think about the role of ACH in the broader mix of payments that are out there today?
Yeah, so I think anytime you're talking about payments, this is a real belief I have. It's really about the user, right? And there's a use case, right? You could argue that, anybody that says, "Well, I like batch processing of ACH because I can set my batch 10 days from now and do a debit." Well, you can set an instant payment for 10 days for now, but it's about the user, right? And so I think financial institutions have to just educate people on what are the choices, right? Because it's great to have all these choices. That's a wonderful thing, right? And but understanding that if you're pushing something onto someone, like you're trying to push them off of ACH to go to RTP, for example, they have to make real process changes at that
Hmm.
organization, and you can't undersell that. And you have to let them know what the characteristics of those payments are. Like, joke all the time in my presentations. I hear a lot of people saying, "Well, the instant payment rails, they're not going to have fraud because they're credit push." It's like, well, wait a minute. If you're seeing credit push fraud in ACH and credit push fraud in Wire, why wouldn't it happen in those networks?
Right.
And again, the network itself is not causing the fraud, it's the end users and the lack of education. So I think when you're payments leader in any organization, it's about understanding what's out there, understanding the technology that you have, right? And if something's serving your need, that's okay, right? And sometimes it's okay to say, we want to stick on check. All right, maybe that's working for you, and you have positive pay, so you're not seeing any of the fraud, and the people you're paying are happy. Great, right? But you have to understand there's a lot of differences in these payment systems. They have unique risks, they have unique operational challenges. And this is like we were talking before the episode. This is why we're trying to reach more and more treasurers at businesses, because sometimes a bank may give instruction to their people like, hey, we're pushing RTP this month, and they have to do that. There's reasons they
Yep.
do that, and I'm a realist, and I'm not knocking it. But as a treasurer, you need to be able to listen to those conversations and say, I'm fine with what we're doing. Why would I need this to be an instant payment? What does it benefit me? I was around in New England when they were doing the push to electronic debits for the electric companies, right?
Mm.
And the Fed would go out and sign up these companies, and NEACH was a part of that, and we would get those volumes to go up. And you would always say, well, if the first one didn't work, nobody else would sign up for it. Same with direct deposit. If the first person that said pay me via ACH didn't get paid, it would have never worked. The beauty is all these choices have been proven to work. So if whether you're an RTP, FedNow, MasterCard Send, right, like Visa Direct, they all work. That's the beauty, right? So that's the one good thing that everybody should be happy about, is no matter what you choose, they're all fully functioning systems that work. It's the underlying pieces that you have to think about. How do I get my remittance information? Is there a chance for straight through processing? I was here when financial EDI was going to solve all the problems, and nobody ever used the addenda records in
That's
ACH. And
right.
now the ISO messaging is so rich, and yeah, nobody's looking at the message, so it can be rich as you want. And so I think those are the pieces that people have to think about, is not the connection pieces. Those all work. The money's going to move. It's going to settle. It's how much do you have to change operationally to make it happen? And then, do you have the interface for it? Do you have the front end for it? People are talking now like, hey, why aren't you doing FedNow as a bank? Well, if they don't have a front end interface for it, they can't offer you send. They just can't, because they're only giving you the plug in the highway. You gotta get the cars onto the ramp yourself. And so technology, understanding where that's at. And there's so many fintechs today, which I think is a good thing. They do solve a lot of problems, but it creates a lot of noise. And I think if I was a treasurer, that's the one thing I'd be most concerned about, is trying to be able to dig out what's noise, what's real. Because you get people that will say, "Oh yeah, ACH in 5 years is going to be gone." No, it's not.
No.
It's not. It's not going to happen. Check will still be here in 5 years. Cards are still going to be here. You mentioned stablecoin. That'll be something that people have to learn about. That'll make its way into the ecosystem, but it's not going to push all these other things out. And in fact, you'll be able to use the rails to exchange stable coins. The existing rails are going to be able to help you with that. So it's just staying up to date and kind of filtering what's noise, what's not. And I all day, you have an hour a day where I just read these trade presses, and I track these predictions on a spread.
Only an hour a day.
I track the predictions on a spreadsheet, and I like to go back at the end of the year and go, didn't happen, didn't happen, didn't happen. And there's never a correction. Smart people never come out and say I was wrong. They'll just pretend they never made the prediction, which I always find interesting.
They learned that methodology from all the meteorologists that are out there.
Yeah, that's true.
Big
Yeah,
snowstorm.
yeah.
No. Oops.
Yeah,
Sorry.
maybe a foot, maybe 5 inches. Who knows?
Right. So, fraud, you've touched on it a little bit. It's so front and center, and certainly all the AI that has matured so dramatically in such a short period of time is helping to identify fraud faster, but it's also helping the fraudsters to do their dirty work even faster. What are kind of the biggest fraud and operational risk mistakes you see financial institutions and, for that matter, corporate senders making when they're initiating payments?
Yeah, I will say, and I'm glad, and this is why I wanted to jump on here. I've been on a soapbox about fraud, and I think as an industry we've made a tremendous mistake. And I'm not saying NEACH isn't part of that, but we talk about the one side of the victim, right? Which is the account that gets stolen, the monies. We have not done enough to recognize that the other side of that is some kid being trafficked, drugs, guns. I mean, the people stealing money are not donating to your local boys and girls clubs, right? And so
It's
we
true.
have to we have to start thinking about fraud differently. And the biggest mistake I still think people make is they have this "that wouldn't happen to me" mentality. And again, because I think most people are good and they think other people are good, right?
Mm,
And I don't want anybody to lose that, right? This is the hard part about fraud, right? You don't want people to become cynical or not trust anything. But I think you can compartmentalize that, right? So when you're at work, when you're originating a transaction, when you're getting an invoice, be the most cynical person in the history of mankind. And then when you're done, go back to being a good person. Because I've seen some invoices as CEO, and I was joking yesterday at an event I did. There was one I told my team, you know what? This is so good, we should pay it because they deserve to get credit for this fake invoice that came through. It was literally so well put together, obviously by AI, but just the urgency on the invoice, they took the time to research who NEACH is, and it was something we would probably buy
hmm
related to tech. It was just so well done. And I think they realized years ago, we're not going to break into the banks, right? So back when FFIEC came out in 2011 on online banking, the bank spent a ton of money. Online banking's really safe, really secure. But the fraudster said, wait a minute, that was fool's gold anyway. What
mm,
really worked in those account takeovers was the gullible end user. So now they've just made a laser beam to the end user. And I think, again, here's where the pandemic didn't help. We've pushed a lot of people to go digital that probably shouldn't. They don't understand technology, they don't understand the threats. And again, this is not knocking them as people. Don't take it that way. They're probably wonderful people. They're probably living happier than we are because they're not slaves to technology. But I think what ends up happening is people just don't have the imagination to say, "Oh, why would someone send me an email saying they changed their bank account when I've been communicating with them for months? Why would someone lie to me?" It's like, well, you haven't
hmm
been communicating with the right person for months. They jumped into your email chain in August and slow played you, and people just can't believe it sometimes. Remember the 9/11 report? The biggest failure they said was we didn't have an imagination because nobody thought they could do what they did, right?
That's right.
Um, and I think it's our big problem in fraud is people are too trusting. They want to help. That's why the urgency in these emails and these texts it works because people generally want to help, and they do understand that we don't communicate like we used to in corporations. The number of times we get calls from our banks saying a CFO was tricked into wiring money about a merger. And it's like, wouldn't the CFO been in on all talks about
You
buying a
would think.
company? But there's just this, "We got to get it done." And they take advantage of that. And you hit it on the head with AI. It's going to help us catch some fraud, but it's also helping them get further ahead. So it's like it's almost like a conflict where you're arming both sides. That's what AI is doing. It's arming the bad guys to get better. It's arming us to catch up a little bit to where they are today, but not going to get us to where the bad guys are eventually. And I think if people step back and understand the second victim in this. I go back, I tell people all the time, go back and watch the Smokey the Bear original commercials. I was just a little kid in the early 80s, but I remember they had a commercial where a deer came out of the woods on fire and a squirrel was on fire. And I remember telling my parents, don't burn down the forest. And we had a drop in forest fires after that PSA went out because people, if you tell them your behavior is killing a deer, they'll stop because nobody really wants to hurt the deer. Nobody
Mm,
wants, and I think if we told people that, hey, being lazy with your cell phone security or internet security is leading to kids getting trafficked, I think everybody would go, oh my God, I'm part
yeah.
of this.
What can I do? Yeah. And
Yeah,
how
how
can
can I
I
help? Exactly. But it's hard to do that, right? Because people aren't willing, like bankers don't want to tell a customer this was your fault, right? Because it's uncomfortable. You don't want to lose the deposit, and nobody wants to ever hear that it's their fault. And I go back to my first year as a CEO. I got a coach, and I remember I was complaining about here's the things I'm not doing well, and he literally was like, "They're all your fault. Get over it. It's your fault." And it's like the hardest thing to hear sometimes, but if you're willing to accept it, it's easy to change from there because when anything is all, the fix is easy. You just do the opposite of everything you're doing. And so I think the same could be true with end users on these payment systems. And I think banks have to look at their security procedures because we fall in love with technology sometimes. And, we used to do callbacks and we said, oh, those are too much. And then we said everybody should get a standalone payment machine where all you do is payments and communicate with the bank. But what did we offer them? Yeah, we'll send an email to verify the file you're going out. So they all put email on the computer that wasn't supposed to have email on it, right? And again, the text, like if you're going to require me to have a machine only as part of the security procedure, do not offer me email out of band option. It should be SMS because now I'm not using anything other than the machine you told me to buy and a cell phone not connected to the machine. But we're like, oh no, you can click email, and the vendors do this because they want you to have all the choices.
Mm-hmm. That's right.
So yeah, I think we have to start over in some ways. We just have to start over with fraud and recognize that it's something. These aren't overly sophisticated attacks, by the way. A lot of the email stuff, if you just went over and talked to a coworker, they'd be like, "We're not buying Pepsi. What are you, insane? Don't send that wire." Right? That
Oh,
is not hard to defeat. You know?
you're killing me.
Yeah, yeah. Or hey, this vendor we've been doing business for 20 years is all of a sudden changing all of their bank accounts. Wouldn't a normal curiosity thing to do would be to reach out to them and go, "Hey, why all of a sudden?" But people just they check the box and move on, and we got to break that up somehow. I don't know how to do it. I've proposed like PSAs that are like too over the top, not just like, whoa. The Fed was like, "No, I don't think we want to go that far." I was thinking like a van with kids and scare people, but they don't want to go that far.
No, well, everybody wants there to be yet another tool that's
Yeah,
going to be the answer to all of this. And certainly there's so many of these now account validation tools
yeah.
and some of
And
them go way.
all the validation tool is going to do is going to let you know the bad guy has access to the account. It doesn't solve for that problem. And it gets sold, unfortunately, Seth. Some people are sold that, hey, if you use this, you're not going to have vendor impersonation fraud. It's like, no, that's not remotely what that does. But vendors got to sell. I'm a capitalist, fine. But yeah, I think it's the other thing about fraud too. Once we get on the opposite side of it, when we're all working together to stop it, that's going to be awesome, right? Because there's going to be 48 billion that wasn't stolen that we get to talk about that at
Mm,
conferences as opposed to saying, hey, losses this year are 56 billion. We'll be able to say we've gone from 48 to 6. Now 6 is still a lot, but man, the difference in sitting in those rooms, right, where that's just a much better message, and we got to get to doing that. And again, I think we can do it. I think if we have honest conversation with end users, they're going to help us get there. And I think we also have to get there has to be some governmental focus, not like a war on fraud, because none of the wars on anything from the government
right.
work, but just an acknowledgement to law enforcement that, hey, if you catch people doing this, yeah, we're going to hold them accountable, right? And not, have people that commit these frauds and get 3 months. Or, I mean, I see some of the postal workers that stole checks in the branches.
Mm-hmm. Yep.
assigning plea deals for like 2 years. Okay, you made 300 grand, 2 years? Somebody in a struggling position might make that change. Whereas if that was 10 years or 15 years, or does someone else working at the post office go, okay, they're taking this serious? So I think we need that part of it too, because, we can do a lot on the bank side, technology side, education side, but there also has to be that other part of it where people say, okay, my efforts are rewarded for stopping this because the perpetrators are getting in trouble and they're not just being able to jump to the next fraud.
No,
But
it's
yeah,
a
it's
really
it's
good point. It takes all the players in the
yeah,
ecosystem, and it gets into places like the postal
yeah,
service to
yeah.
to be a participant in that. I heard a statistic sometime, it's probably about 2 years old at this point, where more than 50% of the applicants for jobs in the postal service were actually specifically to get people into those jobs to commit fraud.
Listen, I wouldn't be surprised, right? You would think that that job and getting a government job, they would be able to weed out personality types that are more likely to steal. And the sad part about this, right, is they push people and they tell you, oh, go to the branch. It's safer than dropping it in the box. Okay. And then all you read about is these arrests at the branches. And it's like, times like this, we're already struggling financially. You get $400 stolen from you. It may not sound like the biggest thing in the world to a government employee up top, but $400 for someone right now is like, could be eating or not eating or gas in the car, or and so this is a bad time to have a lot of fraud because people are already hurting. It makes it worse that it's happening now, and the scams with the elderly people. It's all heartbreaking. When I remember banks call us with these stories, it's like, ugh, it's just brutal, the amount of business owners that are cleaned out, or a widow or a widower gets cleaned out, and then you have to say, "Well, there's really nothing you can do. The rules don't permit you to get the money back," and they gotta go tell that to someone that's probably devastated, right in front of them. It's very sad.
That's right. Yeah, and all magnitudes of this stuff too. I mean, go back a few years and what Bernie Madoff
Yeah,
pulled, and so much of the money that he defrauded was from nonprofit organizations. So it's just
yeah. Do
absolutely
you wanna hear
horrible.
something that'll blow your mindset on this
Sure,
podcast? You wanted to get a little bit racy? Do you know who also did a Ponzi scheme and got away with it, like, in the '90s, a big one? The Jeffrey Epstein guy.
of
His
course.
his pa yeah, his partner got, like, 20 years. I watched the Netflix thing, and he got away with it. It's and this is what I'm talking about, like, there's no trust because people are robbing and stealing, and they get away with it, and meanwhile, somebody was cleaned out of their retirement, or the Bernie Madoff stuff, it's crazy because the victims end up getting in trouble by the IRS. They had to pay taxes because apparently they got more out of it than they put in. It's like, "What? What? What are we
Yeah,
doing?"
there was some very weird scenarios
Very
there.
weird stuff going on, but yeah, and now it's just with the internet and everybody being digital, they don't have to commit one big fraud. They can do 1,000 paper cuts a day and still make the same amount of money. It's really sad. It is sad.
So there we have it. So the Epstein files have now made it into the Treasury Whisperers
Yes.
Talkcast podcast, 40 some odd episodes in. All right. I just don't want any, print screens of, you and me doing this podcast ending up in the files.
Yeah. Well, they'll prosecute you and I'm pretty sure of that. Everyone else will get away with
That's
it.
just great. Nobody needs that. So we're rapidly running out of
Yeah.
time here. This has been a lot of fun. Couple of last questions. So we're probably about, I guess, a week away for the latest round of fraud monitoring changes to take place from NACHA. Any things that you're expecting that we'll see pop up that corporates and banks need to be aware of with these new rules that take
Yeah, I
effect, I
think
think, March 20th.
yeah, I think what banks should be on the lookout for, obviously, is the hidden rules that are in this big rule. One is if you're originating payroll entries, you have to have the entry description of payroll in the first seven. So you got to make sure that's happening because that helps the RDFI detect what type of payment there is. There's also a hidden rule as an RDFI. If an ODFI reaches out for you to return an item back to them, you now have you have to respond. Previously, you didn't have to respond. So the ODFI could be sitting there going, hey, I called you about a fraud. Are you ever going to get back to me? Now they have 10 days to respond. So I think those are two hidden things. And at the big picture level, we're hoping that somebody can find an example where they added one little thing to their process and it stops a fraud. That would be the greatest thing for the network to hear, is that, hey, we implemented a dual signature on invoices as a business and it saved us from getting $1 million loss. Perfect. Because this rule wasn't about everybody running out and spending money on new technology. It was literally looking at your practices for initiating credit payments and making them better. And so that sometimes doesn't require money. That just requires a separate way of doing it, a separate review. Make a rule that says we have to call the number on file when a vendor says, change my account number. Like
That's
all
right.
there's little things I think that are better than the big things I'm hearing people are trying to implement. I'll be honest, because people are already using Verifin in these softwares to monitor transactions. So, uh, you know, I think those things will get better as it learns, but I think it's the on the ground, simple process change stuff is going to have a bigger impact than maybe what others think. And I know from at NEACH as a small business, if we didn't have a dual signing on invoices, we would have lost $25,000. Done. It would have been gone. There's no way the person looking at that would not have put that through for payment. So there's little things everybody can do. And then at the bank side, conversations with your customers, you got to have them. You go out, you talk to them about their business. Just ask them what they're doing from an IT standpoint. Are they getting fraud security training? Are their employees, invested in that? There's got to be ways that we can get corporates to do that. The smaller corporates, the big corporates,
Yeah.
I think do a good job of information security training. It's so smaller companies, and I think they think it's a cost issue, but there's a bunch of free tools. Microsoft.com as a small business anti-fraud program you can just print off and implement it, and it's probably going to help you protect your emails and stuff. So I think keeping it simple is what I'm looking for over the next week or so, and we are going to track success stories. So if anybody comes back to you and says, hey, we stopped a fraud in ACH because we did a little thing, I'd love to hear about it, and we will celebrate the heck out of those people for doing it, because I think that momentum will help.
Yeah, well, for sure. As I hear stuff, I'll get it filtered over to you.
Awesome. Thank you.
So one last question, and then we'll wrap. What's one belief you hold about payments that you think the industry still underrates or just flat out gets wrong?
Man. All right, I'm gonna give you one, and I kind of touched upon it earlier. I think throughout time there's been this notion that debits are safer than credits, and I just don't believe it. Because I think risk in payments is all about who's using the particular system and for what. So, for example, I would argue Verizon debiting me for my cell phone bill as a safer transaction than me Venmoing you $50 for being on this podcast, right? There's no reason for me to pay you. I don't have to do it. So people would say, oh, yeah, but that's a credit transaction. It's safer. I just don't buy it. So that's always bothered me. I had a mentor at NEACH, Terry Good, kind of trained me on that, and I always just believed it, and I just keep getting it reaffirmed. And the other thing I think people are a little naive about is how fast stablecoin might be a real option. And I tell people this all the time. The reason I do that is that if you do an AI search, ask AI how many news stories about stablecoin are positive. It used to be over 78% of them. There's like nothing this country agrees upon, right? And there's nothing that gets positive coverage. So I look at that and the fact that they could probably do it in the merchant space, right? I think all payment systems need a merchant capability to really take off. That's why I'm looking to see how FedNow and RTP are going to be able to work at a merchant, walk into a store. I want to pay you. I think that's important. ACH didn't need it because it's a batch system with the ability to do payroll and direct debit. So that's kind of unique. But if you look at checks, they're still accepted at the point of sale. It used to be a huge driver. So one stable coin has that ability, and I know Coinbase has what do they call that? A whole merchant division where you could do it. I think that's going to go faster than people think. I don't know and I don't know if I'm rooting for it or not. I got to be honest, but I just think people have to start thinking about it and planning it for it to be a thing.
Yeah, I
Yeah.
agree with you. I think it's going to end up in the plumbing without people realizing it's part of the plumbing, and
Yep.
it's going to get set in
Yeah.
stone almost that's
Yep.
a new method of moving money.
Yep. No, I agree.
All right.
All
Well,
right.
Sean Carter, thank you so much for joining me here today in the Whisper Studio. Appreciate your thoughts, comments, and I will say, in your Boston accent.
Well, thank you for having me, Seth. I appreciate it. And, I've heard about you for a long time. I'm glad we've recently started connected and doing some stuff. So I appreciate you, man. Take care.
All right. Thanks so much. That is a wrap for us today, Whisperees. Don't forget to rate the show on whichever podcast service you use. Until next time on the Treasury Whisperers Talkcast podcast, this is Seth Marlowe saying bye-bye for now.
Thanks for listening to this episode of the Treasury Whisperers Talkcast podcast with Seth Marlowe. The Treasury Whisperers Talkcast podcast is produced by the Treasury Whisperer Studio and Treasury Whisperer LLC. Copyright 2025. Any rebroadcast, retransmission, or account of this podcast without the express written consent of Treasury Whisperer LLC is strictly prohibited.